To weekly chart review. This is Monday, May 30th. Took a little bit of a break this weekend, it being Memorial Day and all. It wasn't my country's celebration, but I took a weekend away anyway to help out with another event. So, jumping into currency and stocks just a little bit later on this week than intended. However, it doesn't really affect the stock market that much because it is closed for the day. So if we jump right in, I'll switch this over to the NASDAQ. Okay, so both charts in here aligned. This one is drawn up with my EMAs and Fibonacci lines, while this one is the gaps where they were filled and closed. All right, so I guess we can jump right in. All right, what we see here on the daily, this gap, it looks like it was filled, right? But the only issue is if I switch it over to the 15-minute time frame, it was filled after hours. So as far as that goes with the rules that I kind of put in place, it doesn't quite line up the way that I'd hoped for. I mean, it was missed, as you can see, very, very closely right here. About 9 to 10 pips worth, like I did it to the top of the bar, so 10 pips. Points, sorry. Used to Forex too much. 10 points. It was short from closing off that gap, and then about 5 or 10 minutes after hours, it finished that close. So if you see me switch over to the 5-minute, right? Let's see, right here is where that closed off, and as you can see, 10 minutes later, it shut that down. So you know what? 10 isn't really that huge. I'm going to count this as a close just so we can move on with that. If I leave it open, quite honestly, I still believe we're going to be going back and forth through that particular area anyway. So I'm not really too concerned that we won't come back to it. We could see a short pullback to that area now. But let me just move this over because it's actually going to be this entire day and tomorrow, right? It was going to be double the size because as stock market is closed, now the indices is still up for trade. All right, so we'll just move it up to there, and that's the distance it needs to go. And we'll draw the trend line from where the stock closed, which is right here, to there. So I'm assuming that we're going to have, if it kind of hovers where it is, it's going to drop sharply at open and then continue upwards. Okay, it has been very similar trajectory, for the last few days. So let me just draw the trend line right here as well so that we can see that this gap has closed. And I'll draw that blue. Okay, so this is what I see happening right now in the short term. Okay, we've broken through a previous low that we've had down here, but at the same time, as we're going higher these several last few days, so Thursday, Friday, right? You can see the large climbs. Even after hours, it's actually breaking through previous structure, so that's a very good sign. As the stock was climbing here, it kind of tapered off for a few hours and wasn't really moving midday on Friday because it was hovering around this high after market hours as well. But it finally broke through that and made a newer high in the short term. Okay, so if I switch that over to the 4-hour, it'll illustrate where we need to head to next. Okay. So as you see, there's a gap that formed down here, and there's a gap above where the current position is. This black line was support and resistance, but I'll get rid of that now. It's not very valid. Okay, the next spot that we're going to see it hover, as you can see, the white EMA is slightly above where price is right now. I believe that there's going to be a little bit of play right around there before it finally breaks through and goes up. So the first point of contention that we're going to see is this area here. This was during market after hours and before market opened around May 5th. But as we see right here, even on that larger time frame, right? We'll switch over to the 1 hour just so it's a little bit more clear. Okay, as you can see here, very large imbalances that were made right here on May 5th, right? And as you know, they're actually from imbalances that were filled May 4th when USD announced its interest rate increase, and then it just shot up for the remainder of the day and then tanked. Okay, so I'm expecting the price to pull back around this area within the next few days. So we're looking to get to about 13,300 to 13,400, approximately there. So that would allow us, let's get the measuring tool. That would allow us from Friday's close to get to about, to climb another 700 points. So, conservatively speaking, I would say, that's probably about a 2-day climb. It could very well happen in 1 day. There's been huge spikes in markets before. After Memorial Day weekend, people could be a little bit more invigorated and jump in trading a little bit more bullish. We'll have to see. Over here, where it's the Fibonacci chart and just the EMAs, right? I don't have it marked up just with these particular things. Kind of gives me a clearer understanding as to the moves that we would be expecting. And from here, I'd be looking at something like this. Rejection off that white EMA and then bouncing off this purple fib and up it goes. Okay, and kind of stagnate around here and then finally move up faster and harder right here to about 14,500 before we encounter some major resistance. Now, the deepest that I can possibly see this climb going, it'd be fantastic if it can get all the way up to 15,600, right? That would close off every single gap that was formed on the way down. I just don't see that happening, unfortunately. Like, it's if we go on a larger time frame, like I'll switch over to the daily. The reason I can't see that happening is because that's pretty much going to erase the entire drop since we had our highs back in November, right? And from January even it would close off that gap. I think the highest we could possibly go right now is maybe 15,170 right here to close off this before dropping lower. But if, my favorite tool, the Fibonacci, is any indication, when we go from high to the first low, right, it bounces off the 50%. We go from that 50% to the next low right here, okay? So this was the low prior to, between 50 and the 618, right there. And then finally it had its reversal, okay? So once it reversed up there, like you can see, kind of went up and then down back to the 618 area, went slightly higher and then dropped even further down. Okay, so if we take a trend-based extension and go from peak to low to peak, you can see that this the reversal zone is somewhere around there, and as you can see, it kind of hammered around that spot a little bit before dropping further. So there was a lot more selling interest within that time than there was buying. So we are kind of where we are overall based on all the news, earnings, all these sort of short-term plays. Long-term, I think it was just a very large market correction that was due. I know there's a fear of going into a bear market because potentially we've had a bull run for the last 10 years. And I mean, in a way, sure, that kind of is understandable. But here's what I want you to see, okay? When people talk about a bull run in the last 10 years, okay, that's not necessarily the case because so 2008, that was the last crash that we had. So it doesn't really look like a big deal, right? But this is, as you just imagine, these are weekly candles right now. And from the peak that it had November 5th, it took all the way up to, let's say right here, December 6th of 2010 to recover. So that's almost 2 years. 2 years, 3 years. Yeah, that's over 3 years actually it took to recover just that same price point. Okay? So that was a very large market crash. And it was much more significant than what's happening now because, like I've been saying countless times in the past, in past videos as well, what's happening at this very moment is not because there's a bubble that burst. It's just the kind of culmination of bad policy combined with overspending in the last 2 years of COVID, right? So this is definitely a bear market, but it's not like it's not like a recession crash bear market. This is manufactured, right? And it was intentional. It was as intentional as this entire spike right here down at COVID, you know, where people panicked and it dropped something like 45 or 50% in the market. But the situation goes that, you know, in every market there will be pullbacks and there will be a bear market as well. But as you can see here, this took 3 years to recover, right? Everything else that we see, it's always slight pullbacks, but nothing ever so deep, right? So right now we are getting very deep once it comes to these lines that we've seen. As you can see, even in COVID, it came down to this white line where if I switch over to the daily, that's going to be on that brown line, right? So here was the height of COVID. It went through the brown, just kind of touched that black, and went right back up. And this is almost the spot where we're at right now. So as you can see, it came extremely close, okay? Came extremely close to hitting that point, and I was, like I said in previous videos, I was kind of expecting it to get to that area, possibly touch it, and go back up. But judging from what I saw in the last few days, I marked on this chart that day where I expected it to kind of finish its drops and start going up, right? So as you can see, on the daily time frame, that's where I marked it. Check out the last week's video. You'll see me put that arrow there. Haven't moved it. And sure enough, right, that is kind of the lowest point. We were going to go up from there. So we did have a little bit of a pullback on the 24th and then just higher ever since. Okay, and this is kind of what I expect going to happen here. Okay, so if, like I was saying, the Fibonacci gave us a good indication where it's going to go. All right, if we take it and do the trend-based extension from long-term points, right? So we go from the most high to the lowest point right here to the retracement point, right? You could see that it is like everything kind of lines up. You see where previous volume was right here. That's where I drew this giant line. Okay, as far as the trend-based extension, it's almost off that aqua, and off the EMAs, it's almost bouncing off that 987. I would have been much happier and convinced that this was done if it went just a little deeper, but it didn't quite make it that far. You know, so now what I'm expecting is a move upwards. Okay, and if we do a fib going from that point to this low, I'm expecting a run up to be, like I said, it could be anywhere from that 13,500, but it could go as high as 15,000, maybe even, you know, 15,100. I can't see it going that high. I'm kind of anywhere between this area right there. That's what I'm expecting as far as a run up before it pulls back down. Okay, so where that box is right now, it's 13,866 and 14,545 or 454. So that would bring it to be about here. So I believe that it's going to close these gaps before going back down. Okay, which would, in all intents and purposes, I mean, this run up could last, you know, anywhere from 4 or 5 days to maybe the next 2 weeks, and then drop further down. It'll be a very good thing to watch as far as the stocks that you've picked to see if it actually drops, if their prices drop lower than what they were at on May 20th. You know, very good indication to see what's durable and stable, and to see what is a little bit more resilient to drops as far as this is concerned over the next few months. Okay, so that is kind of my NASDAQ prediction. Let's do US 30. I don't exactly have the same markings as I do here. Unfortunately, my chart crashed on me a little while ago, and it deleted a lot of my markups that I did for like the last 2 years. So a little bit disheartening because it was hours worth of work, but it is what it is, right? Like can't win them all. But as you see, this gap was also closed right there. Let's switch this over to the daily. It's going to be a little bit better to tell. Oh, it wasn't a gap. That was a fib. Fib line. Okay. So judging from how high this has been moving, I drew the fib line all the way from the bottom of COVID. So right now we kind of just hit that 328 zone, which indicates strong trajectory upwards. And as you've seen, as sharply as these moves came down, this has started to climb over the last week as well. Okay. My only concern is that as sharp as this is, it's not going to last for very long. So like we saw on NASDAQ, this kind of peaked about 2 months later. And as far as the move is concerned, if we draw fib from, we'll delete this fib, we don't need that one. But if we take a fib and draw it from high to low, once it clicks, thank you, we draw from high to this low right here. Okay, you can see kind of above the 618 between that and the 786, and then down it goes. So I'll shift that over, right? And as you can see, from that high to this low, retracement value was between 786 and 886, so very deep before it started coming back down. Okay, so now we made our new high into our new low. All right. So if this is any indication as to how it's been happening, it's been pulling up deeper and deeper. So I'm expecting the Dow to kind of pull back in this area. Okay, so that could happen anywhere, like I said, with NASDAQ within the next week to 2 weeks. Right? Once it hits that area, prepare for some more bloodshed. All right, it will be a great time to sell off swings that were potentially grabbed at that bottom, or to be able to take some short positions from that height. Okay, now it's not me telling you for sure that this is going to happen. This is just a best guess, right? As any technical analysis is, right? Just helps us with trying to figure out what's going to happen in the short term and the long term overall. So yeah, that's kind of what I can see from those. Now we can jump into the actual stocks themselves, and let's see how they finished off the week. So as you can see, Apple really liked hovering around that line, like closed and opened all around that Fibonacci line. It had one day where it spiked down and almost came close to the EMA marker, but it started to shoot right back up. So decent recovery there. AMC, what do we have here? Like I said, it dropped a lot further than I originally expected, so I'll just get rid of that Fibonacci. But again, the move would be something like this. Like I was saying before, I think up to that yellow, I can't see it going any higher, right? If we draw a fib from peak to lowest point, right, we can kind of see that even this area might be a TP zone. Right, so it's not too bad. I mean, it's from where it's at currently, it's a pretty decent run still. Like it's got another $10 of steam left in it before it starts dropping off again. But yeah, we'll see how that goes. AMD, and yeah, so you can see almost 18% in one day for AMC. So that was quite the spike. AMD, strong rejection off that purple and off that EMA, starting to go up. What I can see from AMD, it'll close this gap, and that's probably where it'll reject from and start dropping once again. So AMD's target is between 116 to 118. Amgen, I see this dropping back down to that 219 to 222 range from where it's at right now. It doesn't function the same way as tech stocks or retail, so we'll just have to see how that plays out. Amazon, first target, I would be very comfortable saying it's between 2,600 and 2,700, with a higher estimated target of about 32, 30 to 3260. Yeah, those are the gaps that still need to be filled on Amazon. Now that we're in a climb, I would say that is definitely a possibility. All right. Yeah, they're having a stock split on June 6th, which would be, yeah, beginning of next week. So at that point, it's a very strong possibility that this will be driven up until the beginning of the week, so that it's bought and people get better prices. They sell pieces of their shares, and market starts to drop again. It's possible. Not saying it'll happen. Activision, just going sideways. I mean, it seems like a pretty safe bet right now. Whew. Oh, pardon me. A little bit of a yawn there. BlackRock have an ominous 666 closing. All right. I'm not a huge fan of taking that one anyway. Burke B. I don't really have any sort of targets for it to hit higher, but let's go on the 1 hour. Maybe we can snag something here or see something a little bit better. The only thing I can see is gap downs, but they've been filled. Oh, this one hasn't, so maybe that's going to be a target that it comes back to. I would say, let's see, from the high to where it's at right now, judging where the other indices were at, we're going to be looking at it hitting around the 337 mark, possibly 345 before it drops a little lower. Okay, so at least that's a pretty good target. And if it doesn't hit 337, hits 335 and drops instead, then, I mean, at your own risk at that point. Are you willing to stick around for the $2 gain, or do you want to make sure you cut so you keep your wins, right? Up to you. Caterpillar. Kind of all over the place, but there is a gap right here that needs to be filled. Not too much higher from where it's at. Costco, very strong recovery. What did I say as far as a place of reversal is concerned? Imagine that. It's like I know what I'm doing sometimes, guys. And as far as a potential target, the only thing that really stands out, like not just this gap that was formed because of another a retail chain, but right here. It's another one that strikes me around that 540, 543 mark. Oops. Oh, shoot. That was unintentional. And then, oh, that was the top. Okay. We'll bring it back. And then, yeah, I mean, possibly off to new trajectories. Like, it has been doing much better than a lot of other tech and retail stocks. So I have high hopes for Costco. Chevron, as price of oil continues to grow, so will this. Disney, now, woke or not, it doesn't really matter when all stocks start to reverse and recover. Disney is no exception. I mean, it is only 8%, while the other ones were averaging between 10 and 12. Not the worst in the world, but still has a fair way to go. I would say the first target for Disney would be around 127 to 131. DocuSign, nice movement here as well. It went up from its low approximately 30%. That's a very nice start to the recovery. Okay. As far as short-term goals for this, I don't believe there was any gaps to be filled as far as I remember with DocuSign. This is just kind of one of the stable plays that you got to keep an eye out for. As with anything is concerned, like if we drop it to or put it to a higher time frame, the first gap is right here, anywhere between 227 to 154. So once it hits that 154 mark, I would say just be cautious for it to finish its move upwards and start its reversal again. And that would kind of make sense. It would happen around here where it's that gold line. right? And that would be exactly the spot that it hits. But this is a very large gap that needs to be filled. Nothing exciting there. EA Sports, or EA Electronic Arts. I keep saying sports. That's how I associate with it. Nothing too crazy. Like it's still pretty stable by comparison to a lot of other stocks. Earnings were not fantastic, it shows, but you know, still rising just like everything else. eBay, can't really see any short-term goals here. Earnings always decent. But any stocks that pay out dividends, I don't really like jumping in on them anyway. They don't grow as much as other stocks that don't pay out. And the payout is very insignificant unless you own hundreds of thousands of shares. EGLX. This climbed very nicely over the last few days. Earnings report was beat. I mean, it still dropped in value, right? But at least it didn't drop as much as estimated, so that's always nice. Revenue is up, which brings this to, over the last 2 weeks, it's up 60%. So that's very good. My hope is that it hits around that 570 mark. I doubt we're going to be seeing a climb that steep. We'll be lucky, I think, if we hit around that 450. Right here, you know, 450, 430. Facebook, what is its target? Right here, giant gap to fill, anywhere between 248 and 316, and then followed by a couple smaller gaps above that. Definite good potential to be able to take it right now from 195 to 250-ish. So what would that be, like 25% climb? Let's see. Yeah, 27%. So, you know, at best, I would say 62% increase from where it's at right now. Let's see, GameStop. Where have you been? Okay, so it hit its lows, very similarly to NASDAQ itself. We'll see how high this one plans to go. Don't really draw it out as I don't trade this particular stock. Google. So yeah, Google's short-term target, I would say around the 2600 mark, you know, 2678, and then a higher target of 2800. Goldman Sachs, this gap not quite filled, like the wick almost going through it. High of 388. I presume that it'll go, which from its point right now, I think is only maybe like 15%, 17%. I'm always off by 2. Pretty close. Home Depot. Now, they beat earnings again, so it has quite a lot of gaps to fill. This one was done, but it's got one right here at 329-ish, 330. It's got one around the 342 mark, and then one around the 385, 87. So if this kind of continues the way I'm projecting, we could see it increase by about 40% before it starts to drop. Right, so if we go from the low to about there, almost 40, say 37, so I was off by 2 again. That would be best case scenario. Worst case, it would just close the bottom gap here at 329, and something a little bit more reasonable would be anywhere between 340 to 350 before dropping again. Honeywell, gap was closed there, so there's really nothing else to fill. Not really too interested in that. HPQ, nothing really going on. Still rejecting off that EMA. Like I said, good long-term potential, but they're still in research phase. IBM, just bouncing in between the Fibonacci lines. Intel, very strong chance of recovery to about, well, there's imbalances right there, so maybe to about the 50s. So not a huge increase, really. Intuit, I can't say I can see it going up to 700 again. I've mentioned this one in the past. There's really no gaps to fill that I can see except for right here, but that's around the mid 600s. You know, it's still quite a ways to go. Johnson & Johnson, Just normal moving stock, nothing out of the ordinary. Merck, been rejecting off that purple Fibonacci line for the last few weeks, and it kind of dropped hard on the 26th and then had a bit of a reversal. Yeah, this one's been working out quite nicely. While everything else is tanking since February, this has been doing nothing but going up. It's increased over 25% since then. Let's see. 29%. Oh, it was 4% off that time. All right. Microsoft. No gaps to fill. Well, there's a little one right here, I guess, between 293 and 95. And then nothing really past that. Netflix. 2 giant ones to fill. So I guess best short-term projection would be around 490, 500. Honestly, I can't see that happening anymore with Netflix. I think we're going to be seeing maybe a gap closing of 320 before it kind of stabilizes around, low 300s, high 200s for a little bit anyway, until we see that peak. Could be years before we get back up to 700 again. Neo, nothing exciting. Moving just like every other EV stock. Nike, same as other retail. Nvidia, starting to go up nicely. Rejected off that aqua line. Now it's hit that black EMA on the way up. So I would say we're looking at a move maybe to about 265 to 250. Yeah, about that. Just to close off this gap. That would be nice. Pinterest. It's been dropping like a stone, harder than a lot of others. From its high of 88, and now it's valued, like it dropped as low as $16 a share. So, it's not fantastic at this point in time. It is kind of a risky play. If you want to take that risk, by all means. PayPal, lots of gaps to fill as well. I would say the first one we'd be looking at anywhere between 140 to about 170. So nice range right there to snag. Pyrogenesis. Why is it everything goes up except them? That's disappointing. Roblox. Small increase as well. Again, gap to fill before it goes lower. Except that's much higher than where it currently is at now. Roku. Good start to its recovery. Went from 77 to 97, almost 96. So 75 to 96. So it went up 20 some odd %. Man, why do I even guess? I should just draw the stick. 27. That's a nice increase for the short term. As far as gaps to fill, I don't really see anything except way up here. For it to climb all the way up there, to gain almost 300% in a couple of weeks, I don't see that to be very likely. As this drop itself, it took several months, right? Like we had the peak of Roku be back in July of last year and of February of last year. So, judging as to how that went, we might be seeing it kind of peak around that 266 mark. Probably more long-term than right now, but this has been a very steady, slow bleed. Spotify. Not sure where target would be around here. Maybe to this EMA line, it's a possibility. So SPX, yeah, it was just kind of within that range. It was super close to filling exactly that distance that needed to be filled, but it did not happen. Good thing, I guess. Like how much was it off? Let's see. 176 points, another 4.5%, 5% to drop. Tesla, crazy strong recovery, like all the way down from 620-ish up to 757, 759 now at close within the last few days. So very strong mover. Judging as to how this one's been going, right? It has deep retracement before pulling down lower. So the first one we had around the 886. The second one we had around the 886. And the third one, if we have any sort of close movement like that, it'll be around the 886. So that means this gap will close before dropping lower. And that means that 1100 might be just out of reach. Maybe 1050 would be a safer bet to get a TP out of, but I do believe this gap will close before it drops. So, and Tesla moves quickly, right? Like we saw this move happen in about 2 weeks. Similar thing can happen here. Visa, pretty stable. I mean, just kind of bouncing in between a range right now. Walgreens, dropping steadily, not really interested. Walmart started with a great recovery. Big gap to fill between 146 and 137. Exxon, steadily going up, just like the rest of the oil stocks. And oil itself, let's flip this over to the daily. So yeah, oil itself, I would say if it breaks this area, then it's going to come up to here before rejecting and going down temporarily. But at this point in time, I wouldn't hedge your bets against oil. Like this is pretty, it's going up pretty steadily, right? Like once it hits that pink line down here, it doesn't hover there for very long and starts to go up. So yeah, that's kind of my stock analysis for Monday, May 30th, right before the markets open tomorrow. Hope it helps, and we'll see you even next time.